Ever wondered how the world of Forex trading works and how you could potentially benefit from it? Well, you're in the right place. We're going to demystify the intricate world of Forex trading, breaking it down into bite-sized, digestible pieces. Whether you're a seasoned investor looking to diversify your portfolio, or a complete newbie just starting out, there's something for everyone. Imagine the doors that could open with this knowledge. Are you ready to dive into the world of Forex trading? Buckle up, it's going to be an informative ride. Forex trading, it might sound complex, but it's actually quite simple once you break it down. Let's dive right in, shall we? Forex, also known as foreign exchange, is essentially the global marketplace for trading national currencies against one another. Think of it as a colossal international monetary bazaar where different currencies are the merchandise. In Forex trading, you're buying one currency while simultaneously selling another. It's a bit like a seesaw. When one side goes up, the other comes down. If you've ever traveled abroad and exchanged your money for another currency, you've participated in a basic form of Forex trading, albeit on a much smaller scale. The trading happens in pairs, and the value of one currency is always relative to another. For example, if you were trading the euro against the US dollar, represented as EUR/USD, you'd be speculating on whether the euro will rise or fall in value compared to the dollar. If you think the euro will strengthen, you buy. If you believe it will weaken, you sell. There are several currency pairs that traders often focus on, known as the majors. These include pairs like the US dollar and Japanese yen, USD/JPY, the British pound and US dollar, GBP/USD, and the euro and US dollar, EUR/USD. These pairs are popular because they represent the world's largest economies and are known for their liquidity and lower spreads. A spread, by the way, is the difference between the buying price and the selling price of a currency pair, and it's how Forex brokers make their dough. The smaller the spread, the less the price needs to move in your favor before you start making a profit. So, Forex trading is essentially about making predictions about currency values. Seems simple, right? But let's dig a little deeper. Now that you know what Forex trading is, you might be wondering, how exactly does it work? Well, it all begins with the simple idea of buying low and selling high, just like in any other market. But in the Forex market, instead of dealing with tangible assets like cars or houses, we're trading currencies. Imagine you're a trader. Your job is to predict which currency will appreciate or depreciate against another. Let's say you believe the US dollar will strengthen against the euro. You'd buy US dollars while simultaneously selling euros. If you're right, and the value of the US dollar rises relative to the euro, you'll make a profit when you sell. Now let's introduce two important concepts: leverage and margin. Leverage in Forex trading is like a double-edged sword. It allows you to control large amounts of money using very little of your own capital and borrowing the rest. For example, if your Forex broker provides a leverage of 100 to 1, you can control $100,000 with just $1,000 of your own money. But remember, while leverage can amplify your profits, it can also magnify your losses. So it's essential to manage your risk wisely. Margin, on the other hand, is the amount of your own money that you need to put up to open a trade. It's a kind of deposit that your broker holds as collateral. So, let's get back to our example. If you want to trade $100,000 with a leverage of 100 to 1, you'd need to have a margin, or deposit, of $1,000 in your trading account. Forex trading is a complex process that requires a lot of knowledge, skill, and discipline. But with the right education and a sound trading strategy, you can take advantage of the opportunities offered by the world's largest financial market. That's the basic process of Forex trading, but how do you actually get started? Getting started with Forex trading doesn't have to be intimidating. It's all about taking the right steps. The first step to dive into the world of Forex trading is choosing a broker. Now there are countless brokers out there, each with their own unique features and benefits. It's essential to choose a broker that fits your trading style, preferences, and financial goals. You might want to consider factors like transaction costs, trading platform, customer service, and the broker's reputation. Once you've chosen a broker, the next step is opening a trading account. This is the platform where all your trading activities will take place. Some brokers offer demo accounts that allow you to practice trading with virtual money. This can be a great way to get a feel for the trading platform and test out your trading strategies without risking real money. The third step in your Forex trading journey is learning to analyze the market. Forex trading is all about predicting the future movements of currency pairs. To make these predictions, you'll need to learn about two types of analysis: fundamental and technical. Fundamental analysis involves looking at the economic, social, and political factors that affect a country's currency. This could include things like inflation rates, political stability, and economic growth. On the other hand, technical analysis involves studying price charts to identify patterns and trends. This type of analysis relies heavily on mathematical and statistical concepts. Remember, Forex trading isn't a get-rich-quick scheme. It takes time, patience, and a lot of learning. Don't be disheartened if you make mistakes or suffer losses in the beginning. These are valuable learning experiences that can help you become a better trader in the long run. With these steps, you're well on your way to starting your Forex trading journey, but what are some key points to remember? Forex trading can be a great way to make money, but it's important to keep some key points in mind. Now let's unpack the key takeaways about Forex trading. Firstly, understanding risk is paramount. In the world of Forex trading, it's an undeniable truth that the potential for profit comes hand in hand with the risk of loss. So always remember, never invest more than you can afford to lose. Next, we move on to the importance of having a trading plan. A trading plan is like your personal Forex roadmap. You wouldn't embark on a cross-country road trip without a map, would you? Similarly, a trading plan guides your decision-making process, helping you identify when to enter or exit a trade and manage your risk effectively. It's like your personal compass in the vast and unpredictable ocean of Forex trading. The third point to remember is the significance of continuous learning. Forex trading is not a one-time study and done deal. The market is dynamic, constantly shifting and changing. Your success in Forex trading depends on your ability to adapt and learn. Keep yourself updated with the latest market trends, news, and strategies. Read books, attend webinars, and learn from seasoned traders. Remember, in Forex trading, knowledge is power. Lastly, but certainly not least, is the importance of emotional control. Forex trading can be a roller coaster of emotions. It's crucial to keep your emotions in check, remain calm and objective, and avoid impulsive decisions. Emotion-driven trades often lead to regrettable losses. In summary, understanding risk, having a trading plan, continuously learning and managing your emotions are the key points to keep in mind while delving into Forex trading. These points are not just tips but essential tools for your Forex trading toolbox. Remember these key points and you'll be well equipped to navigate the world of Forex trading. So, that's a basic introduction to Forex trading. Remember, it's a journey that requires patience and learning. We've taken you through the basics of what Forex trading is, how it works, and how you can get started. But as we've emphasized throughout, this is just the tip of the iceberg. Forex trading is a vast, complex, and continually evolving field, offering endless opportunities for those willing to delve deeper and commit to constant learning. It's a world of fluctuating currencies, global markets, and intricate strategies. The more you learn, the more you'll realize how much there is to know. We've equipped you with the fundamentals. Now it's up to you to take the plunge and apply this knowledge. Practice with demo accounts, observe market trends, and study the strategies of successful traders. Don't rush into live trading. Take your time, learn from your mistakes, and always keep an eye on the market. The journey to becoming a successful Forex trader isn't a sprint, it's a marathon. It requires dedication, resilience, and a thirst for knowledge. But remember, every successful trader was once a beginner. And with the right mindset, continuous learning, and a whole lot of patience, you could be next. Thank you for joining us on this journey into Forex trading. Stay curious, stay learning, and most importantly, stay trading.